Alrighty, it is officially our start time. I can see most of our speakers have joined. I've sent over the invite, so if you have not seen the invite, please also request as a speaker as well. Because sometimes X is a little bit finicky when it comes to spaces. But before we go into our introduction of every guest, thank you guys for coming. And today's AMA is brought to you by Dusk and Shift, the next financial system, what institution needs, what user wants, what has to get built. So for this particular topic, we have gathered a host of speakers that we find will be really suitable for the subject, from Shift, from Dusk side, and we also have perspective from, say, a go-to-market or VC standpoints. Thank you, everyone, to coming to our space today. Today we have a sweet guest talking about the next financial system, either coming from a go-to-market perspective, a VC's perspective, or project perspective. That's why today we have both Dusk and Shift on today's EMA. So before we go into introduction, I just wanted to quickly recap here. Since if you've been tuning into Shift, you know that it's a very RWA-centric space, and that's why all of our AMA is more RWA, or say TradFi into Web3, Fi, DeFi. What is the difference? What is the merge? What sort of nitty-tricky is there? So this is what we love to bring to our users every time in a little different perspective. So let's see. I can see all of our speakers has joined. So lovely. Today, I'll start with our lovely guest from Dusk Network, Hein. Can you give us a short introduction of yourself?
Hey, yeah, thank you guys for the invite. So I'm Hein, CTO at Dusk. Primarily, I'm busy with the technology stack, right, but also some other stuff on the side. So Dusk basically is a layer 1 protocol built for on-chain finance, right? So on-chain finance sounds a little bit vague, but what we do is we bring together privacy features together with financial assets on-chain, and that's the full life cycle of an asset, just not a wrap asset, but the full existence of an asset.
Lovely. Hi, I also wanted to check, is Thomas here?
Yeah, I am.
Hi, Thomas. Thank you so much. Then Thomas, can you give us your introduction?
Yeah, sure. Thanks for the invite. So I think Hein made already a pretty good explanation on the layer 1. So I'm Thomas. I'm the head of product at Dusk. I'm mostly responsible for the things that are actually built on top of the protocol, because we are not only a blockchain protocol that is merely building the layer 1 where people can write smart contracts and all of that stuff, but we are also actively investigating what we can build in the RWA space on top of it ourselves.
Thanks, Thomas. And next we'll go to Ruthie from Surgeon's Lab.
Hey, just mic testing real quick. Is it all clear?
Yes, all clear from our side.
Okay, beautiful. Yeah, Ruthie here from Surgeon's Labs. Very excited to be speaking amongst these legends. Have been supporting go-to-market campaigns for over 4 years now in crypto, Web3, and AI. So yeah, very blessed. Thank you.
Thank you, Ruthie. And next, I think we'll have Michael.
Hey, hello. Thanks for being here. Thanks to all the guests that showed up. Thanks to Nick that's hosting. Also, please add Tomer as a speaker. She's in there. Fantastic. Hey, Tomer. All right, I'm Michael, one of the co-founders of Shift and a commercial officer in charge of both marketing and biz dev. And the reason that we're building this and the reason that I'm building this, well, we've really wanted to bring value on chain since we saw Terra Luna collapse, FTX. This was the beginning of the building of Shift, and we're still at it. We want to bring value on chain. That's kind of our motto. And yeah, I'll give the mic back.
Thanks. Next, I want to have Tomer, but it seems like there's still a little bit. Oh, I see. Tomer, can you speak right now?
Yes,
Lovely.
I am. Variable. Good. So, yeah, guys, we'll start with a brief intro. Name is Tomer. Been around the industry since 2016. as an angel investor and exclusively investing only in crypto and blockchain-based projects since 2019. Also a founder of Prime 3 Capital, part of the Shift team, and also a proud angel investor of the project. It's very early stage. I think I kind of been with the Shift since day one. Michael and I go long way back. So once I saw that he's working on an RWA project, I knew it's going to be something interesting and probably something special. We hit each other on LinkedIn, and here we are again, doing something amazing and awesome. Coming from a professional background of trading, actually started as something I thought was professional, almost lost everything I had in life, and then I was forced to become professional to earn it back. So that's how I became a professional investor, you can say, trading stock markets for many years. Since the day I found crypto, I basically became just a passive trader of the stocks because, it's not that interesting once you're in crypto. And that's why I'm super excited for Shift, because Shift is really bringing back what we were missing for so long in crypto, in the stocks, which is the fun volatility and the risk reward rates that you have in the crazy and rewarding yet risky world of crypto trading. So yeah, that's me in a nutshell. Super excited to be here today. That's a fun.
Thanks, Tomer. And I see before we go and dive into the session, if any of our audiences have questions, please just keep your request to speak on. By the end of the session, we will have a short live Q&A. So keep those questions, hold it till the end. We'll get to you at the end of the session. So since we have such a great array of speakers with us, and I think most of our speakers here have quite the experience in those sort of Web3 industry. And a lot of me personally, I started working in the industry around 2020-ish. So there's been a lot of narrative iterations. There's DeFi summer, there's NFTs, metaverse, everything we've seen come and go, come and go, come and go. But I think in the past 2 years or even 3 years, RWA and on-chain finance really become the subject. To our speakers here, how do you think it would differ from the previous narrative? And I will go with Hein first.
Yeah, this is a good question. So, like you said, right, you had DeFi summer, which we still see some effects from, right? There's still a lot of DeFi activity, but the hype is a little bit gone because it peaked. I think things there have to do with usability and whatnot, risk reward. I think that's one of the blockers. And if you look at the NFTs, there wasn't really much there, right? Also with the metaverse, like people haunted it for a moment to get value out of it, but there was nothing that was really sticky. And when we talk about on-chain finance and RWAs, I think it's a bit different. I think it's very different because what we're talking about here is, when we talk about most of the RWAs, we're talking about bringing variants of assets that live in TradFi on-chain and making that available to crypto investors, right? Which is one track that is getting a lot of traction right now and adds to the diversification and risk management of crypto investors, which is nice if you already have capital in there or cannot access assets nicely or whatever. And the other side of this, of the RWA and on-chain finance side, is bringing these TradFi assets to live fully on-chain, right? That's a little bit more what we at Dusk focus on. And what that does is it makes those life cycles of those type of assets cheaper to operate and also programmable for natively. So for users themselves, this is a very interesting change that they can really own the asset and use it beyond an investment vehicle. So I think that on those sides, at the moment, you first see like these web assets coming up, and those are really interesting. And then that will slowly morph into this other part as well on the side, where you see new issuances of startups happening, which open a very interesting new investment opportunity for crypto investors. A sort of ICO, but then regulated, right?
Truly, I think the ICO part really speaks to back in the 2020-ish days, just multiple of ICOs, but now it's more into a regulated, compliant sort of structure. What about Thomas?
Yeah, sorry, just to add on to that, because what you said makes it interesting, right? Because the risk with ICOs, of course, and I think that everyone here that is a speaker can attest to that, is ICOs didn't have any sort of a protection for the investor, right? Like you didn't actually own a part of a business, you didn't have any rights, and with these regulated ICOs, basically stock issuances on chain natively, you can get that, right? And that is what makes it interesting, because you can still get quite high yield because you can be acting like an angel investor, but you have actual equity in the asset. So risk reward is a little bit different there.
Absolutely. What about Thomas? As someone who's essentially a builder of products, what sort of a narrative have you seen?
I would fully agree with Hein. And I would also take another angle. I would say that RWAs and on-chain finance isn't actually a narrative at all. It's a trend. It's a movement. It's an evolution in finance. And it's the next step where the whole financial market infrastructure is going to. It's not a temporary trend or hype. You can see that backed by numbers on information dashboards like RWA XYZ, and the number is ever increasing. There are clear advantages to existing business cases from the traditional finance area, and they are moving on chain because the processes are better. And I would more or less compare to, like, would you say the industrial revolution is a narrative, or is it a real thing that is happening? And that's, in my opinion, the same thing in the RWA and on-chain finance space on what's happening with this technology now being adopted and integrated with traditional finance, and having all these advantages that the whole DLT layer provides.
Hello. Can anyone hear me? Oh, I think Michael might be.
You need to add Michael as a speaker again. I think it is connected. So just add him
Yep.
again as speaker, say that he joined as a listener. We all know how, funny.
Yes.
Musk can fix the world, with PayPal, Tesla, and SpaceX, but even he cannot fix Twitter
Voice chat.
Spaces.
Voice chat is the big.
Oh, wow.
It
Twitter
is.
Spaces, is still, the mystery of humanity, why it will never work. It's like, we'll probably get to a speed of light before we will be able to fix Twitter Spaces.
I've re-invited Michael, but in the meantime, I think we can go to us. It's Tomer speaking. Tomer, so what about RWA and on-chain finance? Do you think it differs from the previous narrative?
So definitely, thinking that this time is different. It's we like to say it's it's always the same, but it's always different. So I remember when the RWA started as something that was security token offerings. If you remember, it was called STOs. Basically, to hold an STO, you needed to go through a process of KYC, KYB, AML, and SOF, all the curses with the 3 letters that the governments are giving us: anti-money laundering, and know your client, know your business, source of funds, etc., 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 just to get a piece of one piece out of 10,000 pieces of some kind of a rare Mercedes from the 70s that was minted as an STO. So the industry was definitely worse then compared to what it is now. So I think that the time is right for RWAs to shine, especially for the permissionless RWAs. The world no longer thinks that the crypto industry is in a hole, as a whole, as a place for thieves to hide assets and to launder money and to fund the terrorism and buy drugs. The world understands that this technology is revolutionary, going to change the world, and the financial world that is outside traditional finance sees the financial potential of bringing funds from all over the world with a T+0 speed. To those of you who do not know the term, T+0 means transaction plus 0 days. Usually when you buy something in the stock market, it goes through a bank, that goes through a bank, that goes through a bank, that returns to a bank. And then it takes 3 days actually to settle your transaction, 2 or 3 days. So getting money with a speed that is T+0, it means like a same moment transaction. You get the money, real money for what you've sent, and not just a fake number that sits in your account until they will actually get the money. This is revolutionary for all sides. So never in my life I think that I've seen such acceptance and from the traditional finance side and adoption from the traditional finance side for blockchain technologies. RWAs are going to change everything that we know about the internet, how we use it, how we store value. because it's already digital, right? But it's just that it's digital, but we don't own it, right? You have your car title, but it sits somewhere, in your government, that basically holds the title and allows you to have it and allows you to sell it or allows you to transfer it. So once you mint it and it's yours, you already have it, right? You already have it as yours and can do whatever you want with it. The permissionless RWA capabilities today are going to completely revolutionize the industry from the old days of STOs. Nothing is stronger than an idea whose time has come, as a great man once said. And I believe that indeed this time it is for real different. Not because we are a bunch of nerds that are playing with the tech and trying to reinvent the coin, but because the big boys already are here. They came in and they're part of it. Big money is entering the market, understanding the potential of it, and welcoming the technology. So this time is different, guys.
Yeah,
Yes.
one of the crazy things of what you said is you mentioned the 3-day, 2-day settlement time, right? But there's also the fact that like 10% of all the transactions fail in traditional finance, which is absolutely mind-boggling to think about, right? Or even the fact that let's say you have 100 stocks, right? That at some point in a T+2 settlement time, you basically have 5 more stocks or 5 less stocks than are actually in ownership. And that's what's happening in TradFi, and that's what we're trying to solve here. It's crazy that this happens.
Completely, man, completely. It changes everything for everyone. The amount of
Yes.
liquidity you can attract in a minute, guys. To those of you again who do not actually live like the financial side of it. So when you sell a stock, actually, the money actually gets to you like in 2-3 days. You will see that you have a plus in your account, but you will see that usually there's a tiny star next to it, meaning that if you will try to withdraw the funds, you will see that you are not yet able to withdraw the funds. You need to wait 48 hours, 72 hours for the funds to actually arrive. Now, imagine that you sold it on Friday. You will probably only get the money on Monday or Tuesday. Now, with blockchain, guys, speed of light. I'm selling it now, and I have the funds to do whatever I want with my money in seconds, right away. 0 failures. And if something happened, I held my asset and you held your funds, and it's all good. We didn't have to wait the whole weekend, just to hear that the transaction was failed and to read all the paperwork and go through all of this nightmares. So yeah, T+0, it's awesome.
So let's go to let's go to Ruthie. So what from RWA on-chain finance do you think differ from the previous narrative?
I think one of the things that was very exciting about DeFi Summer and the narratives that we've had between then and now is people came into crypto very fresh-eyed and excited about open access 24/7 trading markets. Like weekends, morning, nighttime, do you want to degen? Do you want to participate on chain? Yes, you can. You can make money. And a couple of years ago, if people were thinking about being able to trade and actually own equities 24/7, even when the markets are closed for Web 2, for Web 3 to have that alpha and positioning on the weekends, I'd probably think, oh, no way. Like that can't be the future. Maybe in much further time, right? But it's come to us quicker than most expected. Just like crypto banking as well came a lot quicker than a lot of people expected for it to just be sensibly integrated into like everyday living and accessible across like now, globally, right? You can use a crypto card everywhere. And then this next proliferation that's happening in DeFi is these RWAs, equities, and so on coming on chain, and people like people being able to interact with them at any time, anywhere, within the click of a finger, and have like instant liquidity, instant transactions taking place, instant settlements. And so I think that 2026 is going to see a huge explosion. I'm pretty sure a lot of people in the space has been seeing this tweet that's been circling around of some of these pre-IPO stocks and their tokens hitting even Anthropic hitting $1 trillion plus today on Jupiter, and people are starting to see what the impact of this really means.
Truly, couldn't agree more. And so last we want to come to Michael. What do you think different?
Am I audible this time? Can you hear me?
Yes, you are.
Am I back? Oh, that's fantastic. All
You're
right,
audible,
fantastic.
sir.
Oh, this is great. Hello, guys. All right. So first of all, I think RWAs are not part of the cycle. aka like what Tomer said, what Heinz said. It's basically growing outside of the hype cycle. It is something that, I in 2018 I met Carlos from Securitize, and then he was talking about STOs, as Tomer mentioned, security token offerings, that heavy thing that we're now trying to turn into a more permissionless thing. But that has been growing steadily. And now, at the time, I remember everyone was saying, the banks are coming, the banks are coming. And the banks were basically playing with private blockchains on their own kind of, garden or walled garden, which they needed in order to actually understand what this even is, because it's just kind of indigestible for a system like a bank to even grasp or try to utilize something that is, I think, very raw. The blockchain is a raw, like metal, right? You really need to kind of wrap it up nicely for them to even be able to touch it. So in came Canton, in came a lot of companies that have filled this gap since. And I see now that every major bank is looking into Web3. Not to say that they're yet, one-to-one with the permissionless idea. They can't really deal with all the implications. But the notion that they have to, A, be part of it, C, support it, B, supported, C, jump to C, actually develop and be part of this ecosystem. And we're seeing more and more financial institutions and banks just jumping into this from every direction, either supporting stable coins or actually deploying Web3 products, or actually moving in funds as liquidity to this world, which is it's amazing in my eyes. So we're working with a couple of Web2 very, very heavy partners to bring in new products that they believe will be successful not only for Web3, but also for Web2 users. So what I'm trying to say is, I don't think that RWA is another cycle, is another hype. It's actually, as Tomer said, as Heinz said, as Thomas said, as Ruthie said, it's a revolution. It's here to stay. It's going to change finance forever. It's going to change how everything works within these boundaries, because it's inevitable, because it's so much more efficient, so much faster, so much cheaper, so much more composable, programmable, et cetera, et cetera. And finally, it will be more safe. I'm not saying it is right now. Maybe there is still a caveats, things like, call your bank an undue transaction. Still sometimes an advantage, but other than that, it's just changing from the inside. They don't want their old systems. They know that their users are moving to new ones. They need to adapt. They need to get better. That's basically it. Yeah. They're not our friends. They just need to adapt.
Yes, I think all of our speakers here
Back
put
to
on looking at RWA on-chain finance. It's that it meets the holy trinity of opportunity, efficiency, and safety for all the parties involved. And that is what previous narrative could not address, especially on the safety or say compliance part. And so one follow-up to this question, we know about this kind of a shift in both the traditional FI and say the DeFi space. Can all of our speakers tell me in 3 sentences or less, where do you see real adoption right now, or what has caught your attention? So we'll go to Michael first.
Sorry, I lost a tab. Well, I think that stablecoins have made a crazy move in 2025. And if you look at underneath adoption, I'd say prediction markets, but really most people on prediction markets, they're not necessarily crypto users. It's not the point. And that's a big adoption wave. So you're getting stablecoin users, you're getting a lot of people that want to receive stablecoins as salary because it's quicker, easier, faster, better. And a lot of people that are basically using crypto on prediction markets, not necessarily those crypto users that are used to do it, that are using systems like, Web3 systems. So you get onboarding from that side. those two waves are what we see right now, but it's just the waves, as I said before.
Mm-hmm. And next, can we go to Thomas?
I think that's a quite complicated question because you first need to ask yourself, are you talking about B2C adoption or B2B? So what kind of adoption are we talking about? I would say and completely agree with Michael that stablecoins are hugely adopted, also obviously supported by the numbers. We could even say nowadays that stablecoins were actually the first RWAs bringing dollar on chain, and that's now in the hundreds of billions. And then now what you see with BlackRock and other large institutions is that they are putting cash-like products on chain because they are easily redeemable and issued. They are priced against the money, so you don't have those volatility problems. So that's much easier at the moment than equities. That's obviously the next step. But I would also say a lot of underlying infrastructure that blockchain provides, where an end user doesn't even know that he's interacting at some point vertically in the whole supply chain line of some sort of financial product, is now using blockchain. So there could be a payment provider nowadays that's in the back using some sort of blockchain technology provider that's giving him a better and more efficient FX access to do the foreign exchange rates that are then with less fees or less gatekeeping there. And so I would say there is a lot more hidden adoption happening right now than most people in the crypto bubble actually see, because the focus is quite often only on products, right? So they say like, oh, is mass adoption now happening because there are new thousands of users on this DeFi app, but there's a lot of things happening where you don't even see it.
Agreed. What about Hein? What's your thought on this subject?
It's difficult to top that, right? What was already said. But what I would add on to this is, I think Thomas gave a good view of the primitives that are currently happening, right? And Michael also described those already. So we see a lot of these primitives come in, like the stablecoin growth increasing. And with that, you see also more of these RWAs coming online. So these things do not happen in isolation, right? Like they are very strongly coupled together. And so I think I wouldn't say that stablecoins have reached their peak, but they are maturing. And they're a very important primitive for the next steps. And the next steps are finding that killer app, getting the retail adoption of RWAs to start happening. And I think at this point, the foundation is there. It's very strong. So I suspect that on the alternative yield side for crypto investors, so these RWA products, those are going to see a lot of growth this year. We've already seen a lot last year, but this is where we'll see more of the growth.
Thanks, Hein. Let's go to Tomer.
Hey, sorry, Tomer, as you probably saw, disconnected for a minute and I missed the question. If you can please return on the question. I tried to get it from my fellows here, please.
No worries. So what we have, it's either what do you see, where are you seeing real adoption right now, or what has caught your attention? It could be any of those.
Okay, so real adoption, I believe that you all saw and we still see, and it's with stablecoins. It's the most common RWA asset that has been here for a very long time, and people just did not call it a RWA yet, but it is an RWA, right? So stablecoins are, of course, as we see, are becoming more and more popular all over the world, across the globe. We see governments discussing CBDCs now freely and announcing their tests and the expected dates of launching these CBDCs. And it's not because they like it, it's just because it's easier and it's the right thing to do, right? So definitely I'd say that stable coins and CBDCs are becoming a thing. Then we have, of course, as always, the UAE in the realms of crypto and blockchain, leading the way with real estate tokenization that is actually becoming something that is very ordinary and natural now to speak of in the UAE. So I believe that real estate is going to be the next step. And this thing is going to mainly unlock the ability to provide liquidity to real-world assets in other regions of the world, two other regions in the world. And by that, basically making the global real estate market as simple as Amazon or eBay, right? Because it will be as simple and quick to purchase real estate assets. Now, of course, you know that it's not for everyone, you know, to go online and start to buy a penthouse for $500,000 or just a studio apartment for $150K. So, more innovations will arrive alongside that. And I believe that alongside the innovations of actually allowing to hold it, and I'm not talking about fractionalization of assets, because personally, or a humble servant doesn't believe in fractionalizing real estate, due to the simple fact that exactly like you guys don't want to share your iPad with your buddies and your classmates and your brother or sister, and each has an iPad, same goes to the real estate asset. But I believe that in terms of liquidity and opportunities for mortgages and to provide more, let's say, accessibility to real estate to the every average Joe in almost every country, we're going to see a lot more innovations and opportunities to bring these. And of course, we cannot forget the number one asset that is still waiting for real adoption here, which are stocks. We already have a crypto here, which is like a test, you know, of a nice volatility trading, you know, sharing Discord groups and Telegram groups, you know, and having fun, you know, pushing a project and funding some kind of a meme as a group, just because we want to say that we are here and we will decide what has value and what doesn't. But bringing the stock market in, guys, it's like, you know, a whole new level. Like, imagine, you know, you're looking at a company like NVIDIA. NVIDIA is like what? 3 times bigger than the whole crypto market now. So imagine that you bring her and the rest of these titans and the volume that they can generate into a permissionless world that trades in the speed of light 24/7. So I believe that stocks definitely are the next big thing. And the more mature and unique thing that we're going to see, the more exotic thing is going to be real estate. That's my opinion about the matter.
Seems like green mind things to like. So last we go to Ruthie. So what have you seen that that's real adoption right now, or what specifically has caught your attention?
Yeah, I think one of the things that I was talking about with the team the other days, you know, and so on, is that this pre-IPO trading concept, I believe, is going to be a huge. It will be one onboarding event for retail as we get closer to like IPOs for Anthropic, SpaceX, and so on. Like right now, it's not as big, and I think it's a fraction of what it could be later on this year, especially when everyone on Instagram, Meta, the short form content, Twitter is going to be talking about these IPOs coming in close. And everyone is going to want to speculate and get exposure to it because, you know, not many people were able to get access to the rounds going on within these private companies, right? And so to be able to get exposure, speculative, on these companies before IPO date, and then for that to roll over is very exciting. I think a lot of people are going to want that exposure, and it will be a great onboarding event for crypto. So that's one of the prominent kind of like use cases I see that will appetize a lot of retail and DGen retail into crypto.
Very much agree on the DGen retail pre-IPO part. And so since we have an overview of what RBA on-chain finance and all of our speakers mindset on what it is to the whole as well. So I like to ask the next question to our Dusk and Shift people here. So Shift and Dusk tackle sort of two sides of the same coin, right? It's compliant regulated RWA in the crypto world, either more from a LM perspective or more from a product perspective. So what have you seen in the old financial system that you wishes to address? And I think we'll start with Hein.
Yeah, so when we talk with regulated entities, it kind of depends, right, which angle you want to take. So they have a lot of concerns, right, around user onboarding and processes and how money flows take place, right? And their mindset is not is very different from us, right? Because the technology is very different, and the problems that they see are sometimes inherently solved by the technology, while other problems come up. So what I see there is it's for them, it's very difficult to just see that, for example, let's say we program a rule in a financial asset, then they're always thinking of, yeah, but what if someone can abuse it? But they can, because then the transaction just doesn't work, right? Like this the atomicity of a transaction. And it's very interesting to solve those problems. I think that's where most of the difficulties with institutional adoption at the moment are, is showcasing and convincing how different this technology is. And then making sure that the compliance department understands what's going on, right?
Absolutely. So I'd like to ask Thomas this.
Yeah, I think that's one of the major problems. Basically, we are sitting on a distributed database that most likely also exposes a Turing complete.
I didn't know if it was me or him.
Yeah, I think Thomas's audio sort of dropped. So
Classic X.
Whoops, must be X. Okay, then Michael, would you answer the question? What?
I will try to take his place, although, I'm joking. Yeah, listen, what we see basically is from kind of the other side of things, it's not only about faster or cheaper. It's about less intermediaries. It's about, basically, as I see it, it's about boundless and limitless. The borders are brought down. I think Tomer said it nicely, that you're basically allowing movement of capital from country to country more easily in the RWA for real estate. But not only, you also get all of this blockage and all of this basically. I think the best thing that RWA is doing is just bringing those boundaries down and ease of use, and that is from the customer side. From the B2B side, I want Tom's to actually continue up, because I think that it sounds like maybe Hein can continue up. They're really working in conjunction with these banks, and I hear the pain. I worked in TradFi. I worked in very regulated financial companies. Every move has to be calculated from the perspective of trade risk and tax and legal perspective, and everything has to be scrutinized in so many ways. I think we should mature to, DeFi should mature a bit from TradFi and learn from them, because we need to actually be more orderly and more safe. I see so many money getting stolen in the past couple of months, and we need to get better. And it really hurts me as an industry. And I know that the banks, they see that, they go wild. They can't imagine $300 million disappearing. There's no such thing in TradFi for a bank, right? I mean, yeah, there are scams, there are all sorts of different issues, but this evaporation thing, that boggles them. So from their perspective, there's a lot to move forward in terms of security. But for the user, it just brings down every border and allows every person on the globe to be part of this financial game and be part of the fair system that everybody has the right to be part of, and is actually half the world is kind of blocked out right now. So that's the biggest message that I can shoot out in terms of what is the real change here. That's accessibility.
Thanks, Michael. I think, unfortunately, today there seems to be a lot of problem with X, but I see Thomas is back, and then let me just invite a speaker. Hi, Thomas. We would love to have you to continue your answer there. We were just talking about what have you seen the old financial system you wish to address.
Yeah, I hope the wonders of X made it work again now.
Yes, we can hear you fine now.
So I think one of the problems is that we are working with quite a new and complex system, right? We're basically sitting on a distributed, decentralized database that has a Turing-complete virtual machine attached to it, where you can do almost anything. And what is being done there is secured by consensus rules and by cryptography. And a lot of the regulators need to understand how that works. And there are a lot of them in those positions that might be not that technical. But working in crypto, there is almost a necessity, no matter what kind of role you work in there, to be tech savvy in those areas, right? So I think the traditional finance needs still a lot of education material about how stuff happens there. Like Hein already said it. They ask, how is it possible that this and this then doesn't work? But you just say, okay, then the transaction fails because it's atomicity. The default state of a trade on a blockchain at one point is going to be DVP, delivery versus payment. There will be no clearinghouse. There will be no other third party or multiple intermediaries in there where you have error rates, but it's just going to be an atomic transaction. Somebody wants to buy equity A against cash X, and it's just going to happen. And if something inside the rule set of a smart contract doesn't work, it's just going to fail. And to explain this to an industry that is still working on IBM mainframes from the 60s maybe, with COBOL as a programming language that most people don't even know anymore, there is a huge technological gap between that needs to be addressed. But I also completely agree with Michael that we can learn from traditional finance. It's not such a usual thing there that hundreds of millions get stolen and then easily laundered. But I think that's also sometimes a problem of the crypto industry. We came pretty fast technology-wise, but the expectations of shipping products often leads to people neglecting the security aspects, and some development procedures there might not align with TradFi. And then people are saying, oh, TradFi is very slow there, but it's just a very diligent process there with a lot of regulation around it.
Yeah, I must say though, that TradFi has the advantage of not having everything in the public and the clear, right?
Yep.
So I would say they have much better development practices than most crypto projects will have. But at the same time, they also have everything gated and you cannot really see what's going on, right? So it's all a secret, which is good and bad at the same time. Now, I must say that with the coming of AI, for example, what we as an industry can do now much quicker than ever before is formally verify that everything from low level up to high up is proven to be correct, right? Code-wise, that we can say, okay, if I do this, then I know this will 100% happen. And with the acceleration of this AI development, I think that it's just a matter of time before all of the fundamental software will be formally verified, and the chance of these sort of logical errors happening, what we see in DeFi with hundreds of millions stolen because of some missed rule or whatever, that is going to reduce. But it's going to take time, and it needs more professionalization from the crypto industry as a whole.
Thanks, Hein. Following just what Thomas, Hein, and Michael has said, I think I wanted to ask, like, from a go-to-market perspective or VC perspective, I'll ask Ruthie first. Do you think it's any problem that you have seen is the biggest hurdle still for, say, the old financial system or the old world per se?
I just think that like the past month has been a bit of a narrative setback for DeFi and on-chain finance as a whole, just with the amount of hacks and kind of compromises that have been happening on-chain, and billions of funds being compromised in total now, right? And so there's a lot of, I guess, like fear, anxiety, and risk of having your funds on-chain in the perception of it not being safer. But overall, like into the future, we're seeing so much security audits and measures being taken by new gen DeFi protocols. And then, like you say, like Shift, for example, Dusk, and everyone that's participating in this ecosystem, they'll cross that chasm.
Thanks, Ruthie. So today, since we have quite an eloquent speaker with us, I think most of our speakers has answered some of my questions already. So I think we'll skip to some of the more hard-hitting questions I'd love to hear some perspective about. So I'll go with Michael. So you previously stated for DeFi to become a financial backbone, tokenized assets must be designed to function as crypto, not just intimate TradFi. Can you expand on how Shift aims to achieve that?
I'm just rereading the question because it's a hard one, right? Let me understand what you're asking.
No worries.
A financial backbone, tokenized assets must be designed to function as crypto, not just imitate TradFi. Okay, that's perfect. So yeah, now that I understand the question, so what we see in the last couple of months is mass adoption for RWAs, but on perps, which is amazing because it's basically a leverage tool, which is, I'd say, maybe a bit dangerous sometimes because of price feed liquidations and different issues. But you really see that it's been adapted. Like instead of trading regular stock and assets, people are flying on 50x and basically on perpetuals, which are backed by other types of liquidity, and they're just they're pegged to a price feed. That is a real, I'd say, kind of adaptation that crypto brought to a TradFi product. And I think that we'll see a lot more of these types of, let's say, specialities or a different kind of flavor that companies have brought to the crypto market and fits better to the actual user. It's all about fitting. It's called product market fit, and it's all about finding what your user is actually looking for, and if you can solve his problem in an easier way that his current solution is doing, in a better way, in an easier way, in a cheaper way, in a faster way, etc. And so if there's really like what we're going to see is that, like, how we do it, basically, how we aim to achieve that, is by adapting and bringing products. Kind of, let's talk about our first wave that's coming right now. We're bringing leveraged spot assets. So we believe that the leveraged issue or feature is something that's interesting and something that people want. But on the other hand, we believe that safety comes hand in hand with that. So we've chosen to bring in leveraged items that are core leveraged. The ETFs are leveraged at the core. That means that they are not exactly like perps. They're basically free from those liquidations that you get on perpetual platforms. So you don't have a price feed internally on DeFi that you're dependent on, which is what happens right now. But you're still having a leverage position, and you're doing it in a safer way. You're holding a token. You can transfer that token. You can sell that token at any given position, and you cannot be liquidated. That is the biggest point here. So I think that this from our point of view is one thing that we're looking into as an adaptation. I think another thing that we're seeing that is already pretty big on crypto and is an adaptation is vaults. Vaults are basically like credit or a savings kind of account, and they've been adapted to a permissionless form, and I think it's something that we're looking deeply into right now in different kind of products within those vaults. And I don't want to give too much away right now because it's not going live yet, but really interesting things together with financial institutions to actually create kind of Web 2, Web 3 products that act as saving accounts, but very, very liquid. You can just come in and come out whenever you want. Yeah, that's in summary. There's a lot more.
Thanks, Michael. I can see, wait just a second. Okay, I can see Tomer's back on. So before we hop on to my original question to both Hein and Thomas, I think I'll go back to Tomer here. So we were just, before we went into Michael's question there, we were just wondering, like, from a VC or go-to-market perspective, what kind of problem have you seen that is the biggest hurdle still for the own financial system?
Well, I think that we kind of discussed it prior. So I think that one of the main reasons are two that I mentioned before. Again, if we're discussing again, the question is for the old traditional financial system, right?
Yes, I think you did touch on it previously, but is there anything you want to add on? If not, we can go to the next question.
You can go to the next. I'd say that the liquidity access to foreign manipulates instantly and gain usability to other more unique exotic reads and provide final solution. And of course, speed. T plus UI is a whole new game changer. These two are probably my choices.
Thanks, Tomer. So I want to go to our next question, which is for Hein and Thomas. So private by default, accountable when required is the Dusk network ethos. It seems what the institution needs is at times at odds with the sort of most public ledger sort of a L1 mindset. So can you expand on how this ethos came to be? How does it express in Dusk network and its product?
Yeah, good question. So it basically starts with requirement engineering, right? So when we initially started, we were speaking to some institutions and they clearly mentioned what their problem was, right? And when we started talking more and more with them, we tried to understand how do your internal processes work? How does it work with issuances? What sort of guarantees do you need to give to have a regulated product in place? And from there, we understood clearly that there is privacy in TradFi, right? It's like so you cannot see from another participant what they're doing, right? Like if I execute a trade, you cannot really front run that. There are some exceptions to this, and that has to do with layered access to bigger exchanges. But in general, if you're a normal retail trader, you cannot front run or interact on another one if you're in the order book. And so we try to learn and understand how these processes work and how you can map this to DLT. And in many of the rules, for almost all financial regulators, this idea of front running is market manipulation. So for us, it was a must to include privacy by default because it is a basic requirement to do regulated products, right? But at the same time, there needs to be some sort of accountability. And accountability comes in two forms. It first of all comes in the form of an action that's not allowed should never lead to a succeeding transaction, right? So certain set of problems that you face can never happen, right? For example, let's say when liquidity becomes a problem, right? Liquidity on exchange that at a certain point the price crashes too much and normally you would pause an exchange. What happens programmatically, for example, say, okay, then you cannot even execute the transaction, right? So you programmatically stop it instead of freezing the exchange. The other side is that you basically be able to allow an auditor to check what sort of transactions took place. So you give them a privileged key that can see a subset of the actions that took place. So they unobfuscate data that is relevant for them, or you let them generate reports that are relevant for them. And that you then submit to the regulated entity. Now, in the EU, you have certain regulations that give you exemptions to existing MiFID II regulations, so the regulations for issuing stocks and bonds and other securities. So we have a little bit more freedom. But this is how we ended up working towards this different mindset, really from what's the problem to what's the solution here.
Anything you want to add on, Thomas?
Yeah, I think the biggest discriminator here to be aware about is that there is a difference between anonymity and privacy, which is completely unregulated, and the compliant privacy path that we are going for, right? So what we basically do is we allow users to be private with their assets, to have the ability for private transfers. For example, we are working on a product that is called Hatcher, which uses homomorphic encryption on an EVM layer, where you can wrap specific tokens that could also be tokenized stocks. And this leads to the aspect that your portfolio, what kind of stocks you own, are not revealed to the outside. So you cannot just go on the blockchain explorer and see, oh, this guy owns this and this stock. And you can also transfer the stock. And you may see transactions happening on a network, but you don't know which amount. You don't know how much a person owns, which is also a security aspect. If we saw the recent developments also in France, for example, where people with large crypto holdings, because of the transparent nature, gets targeted. So this is a real problem. And the same can then be applied to exchanges, to trading, that the order book and who sits where and what kind of transaction goes into the mempool is not directly public, where MEV bots can do the so-called market manipulation according to specific legal aspects that Heiner already mentioned. So we try to be private, but we also try to be compliant at the same time. So we do not only use technologies like Monero or Zcash is using for making these transactions private, but at the same time, we allow to disclose to an auditor, or if you need to disclose it to a specific institution in jurisdiction, we have the cryptographic primitives in place that the sender and receiver can still be proven afterwards and be provided off-chain without revealing it to the whole public generally.
Thanks, Thomas. That was really well put. So excuse our X's technical difficulties today. So we still have some people dropping off, but I think since we still have most of our speakers, we can move on to our next question. So this is for our general audiences, because I think aside from our speakers who are working deep into the industry, I think it is still as a outside person or someone who just started either from a traditional investor going into crypto, or crypto users trying to utilize sort of RWA as an asset. I think for a long time, institutional crypto and consumer crypto are treated as separate worlds, just like TradFi and DeFi are treated as separate worlds. There's different chain, different users, different assumptions. I think this is both Dusk and Shift here sort of is a converging effect of those different worlds. What does this actually look like in practice, though? Because for our everyday users, they might not be as high frequency users or heavy degen TradFi or crypto users. I'll ask Michael first.
Yeah, that's a great question. We really experience this convergence. How it looks like meetings with banks. That means long processes, meeting with regulators and meetings with banks that take months and even years, I'd say. We've been in it for 4 years, and I've been in the industry since 2017, and I've seen these processes been going on since. I mentioned Securitize. They were kind of the first guys who came in and said, "Hey, let's tokenize things like stocks or real estate." I remember back then the thought was revolutionary, but it's been in the works since then on all the sides. The technical side, I think, without discouraging any technical people, it's not the crazy aspect of this. The crazy aspect of this is getting basically the old generation and the way they work to actually fit in. And I think Thomas talked about it a lot today. He really knows a lot about that. Maybe Hein also knows a lot about that, because they're sitting down with these people as we are as well. And you're basically, on one hand, you need licenses, which requires a lot of policies, which requires people doing things and things being done in a certain way. It's very old school. You need officers, like credit officers. Sorry, not credit. I don't think we need credit officers in this one, but risk officers, CISOs, all sorts of different compliance that needs to meet the old school needs. And if you're doing a DeFi project, you still need to adhere to these old rules and policies. Even the new MiCA laws, and even all these digital licenses basically take you back to adhere to financial institution-like rules, which basically come to protect the investor and the user. So this is kind of what we came in for. We knew this from the get-go. We're built from half TradFi people. One of our founders is an ex-regulator. One of our founders is an HFT expert that's been on trade for 25 years and is into risk and portfolio management. Another one of our founders, CTO Thomas, was the CTO of Flow Trader. And so we're coming from a background, and I worked in a TradFi mortgage company in the past. I was CTO of a mortgage company. So we're all coming from these traditional finance companies, and understanding the requirements of both partners and regulators. And finally, we connect that in with the marketing and the product aspect of Web3 and B2C. And this is where everything becomes interesting again, because this time you get, as we mentioned, a cheap, quick, immutable at many times, not all the time, because once again, banks cannot deal with the 300 million evaporating just to nowhere. They sometimes need mutability. So not everything meets that, Satoshi dream. We are very much in our mindset, decentralized and oriented for open borders, no discrimination. But a lot of times we have to write on our website that we cannot serve U.S. citizens, and it makes me sad. I don't want to limit my product to any person in the world. Of course, I don't want terrorists to use it, but ruling out a country, that's just it's not good for the ecosystem, basically. But it will take time until everything is on par and everybody can, let's say, speak to each other on this global market. And it's not as easy. It's easier said than done. So it's a process that is going to take more years. But finally, you're going to see those you're going to see those banks, the neobanks, that will have both crypto and fiat and credit cards and savings and vaults and RWAs. Everything is going to be converged. We're seeing that moving forward day by day. I'm happy Hein is saying 100%, because I think that everybody here can see it from their own perspective and see it's moving that way. So yeah, back to you, Nick.
Thanks, Michael. I think one of the things Heinz has touched about as well is providing the safety to users and without compromising the opportunities they can take. And that's why the converging happened, especially in the RWA on-chain space. There needs to be, say, compliance, safety first, then any users who wish to use any of the products can actually be operating in a safer space. So, Hein, I'd like to extend the question to you.
Yeah, thank you. So one thing I want to highlight a little bit more of what Michael said is what he said was really important, also with regard to the need for regulation, why we have it. The regulation is not there to pester people, right? Like often it might feel like that way, but in reality, it is there to protect investors. Now, whether that always means that the regulations that we have in place lead to that exact result, that's not necessarily the case, right? I'm not a big fan of regulations in general, but I see the merit in them and the importance of it. So what Michael said there is really important to keep in mind. They're there to protect investors. And one thing that we've been really bad at in crypto is protecting investors. So now that these two worlds are converging more and more, we have to be pragmatic if we want to support these use cases, right? So this is also why I like permissionless blockchain so much, because you allow both, right? Like you allow like the idealistic, free-flowing DeFi cowboy stuff, while at the same time also have regulators there, allowing people to onboard to regulated systems to do the KYC if they want to or not, right? Like you're free to do it. Hey, it's a free world. The blockchain is the internet, right? Like the data that flows there, it's none of your business. But if the business comes into your door, it does start mattering. And what you see now is, of course, that some of these institutions are slowly coming there. And it's going to be tough. We've seen it. Michael's seen it. Tomura's probably seen it as well. It's tough to get these people on board, and rightfully so, because it's not easy to do what they do, right? Like we can often say, yeah, sure, they're working with 80s technology, but the guarantees and context that they have in place, you need to be someone that's seen how the sausage is made and being able to translate that over to crypto. And I see also a lot of cowboys in this space that try to do this thing, but it's also going to be a mess because they didn't follow. They went quicker to market than doing the things right, and I think we're going to see a lot more hacks and problems there before it gets better. But once we've proven ourselves as different crypto projects, set up the right systems and guarantees for these TradFi players, then we can see actual adoption happening. And the first bank that is going to go fully DLT, it's going to be marvelous. It's going to be really something. It's going to be tough, and we will probably see banks like Revolut being some of the more first movers, because those are actually adopting full verticals. And I think that's also one of the things where we're going to see very interesting things. Companies, like Michael said, that are going to go full vertical, that are going to do the payments, that are going to do the investments, that are going to do all sorts of other extensions to lending and yield fully on the blockchain.
Thanks, Hein. Thomas, do you have anything you want to add?
Yeah, I would say if we're talking about these two worlds converging, it's a step-by-step process, right? It's not happening in one step. It's happening in phases. And we can already see how it's currently being done, right? So the convergence right now is we have the cash leg now on-chain with billions of stablecoins, which is the necessity as the settlement currency for on-chain finance and trading. And now we see how more and more assets are being tokenized and being moved on-chain. Now the accessibility of these and how they are getting priced is one of the next complex things to solve, so that you are able to buy a stock at the same price as you would do on the traditional exchange. And then one of the next steps that you see happening is that more and more convenient on and off ramping solutions via stablecoins or other providers are happening, where you suddenly get a virtual IBAN and it's somehow now your blockchain being connected to the banking system. You send euros there and you suddenly get the euro stablecoin on your wallet. So it becomes more and more interconnected. But that real convergence is actually happening when you move the whole financial infrastructure and all of those instruments directly on chain. So for example, in Europe, and that's also something we are working at in Dusk, is the DLT TSS license, which is basically saying that you are allowed to operate a complete trading and settlement system, including the security, living on chain. So that's the real thing happening. But that would be basically, in my opinion, the ultimate convergence. But that doesn't mean that the previous steps are not happening. So for example, if you look at Shift, I would assume that they are going to tokenize stocks. They're not going to natively issue them. Why are they not doing that? Well, you are not going to convince Tesla now to redo their primary issuance on chain. So you need those in-between steps until you reach the convergence. And that is a step-by-step process that includes the trading infrastructure, the on and off ramping infrastructure, the payment infrastructure, and everything around that. So this is a very large topic, and we will see this development probably happening over the next decade. And there will be first movers, like Hein already said, with Revolut. And there will be banks that might not even hop on board for the next 20 years.
Thanks, Thomas. So I think we have Tomer back. And hi, Tomer. Can you hear me?
Yes, you got me back in the middle, my friend. This time it's on me. I just got an important phone call that I had to take, so jumped right back.
No worries, no worries. We were just talking about for at least for people who are listening or our general audiences, it seems like sort of institutional crypto, consumer crypto are treated as separate worlds. There's different chain, different systems, different users, different assumptions. And I see like Shift and Dusk here, they're actually doing sort of a converging effect. So from a VC's perspective, can you tell me what sort of a convergence in those users' chains looks like in practice for you?
If I'm understanding the question correctly, then I will try to share my piece and my opinion about this convergence and if or not we're going to see it. The way that I see the convergence of the TradFi world, the TradFi users into crypto and the realms that they're trading in, and I assume this was the question that you were referring to, which is ETFs and other financial vehicles who allow basically the bridging of the old into the new, and how they affect us from the inside. So the convergence from Wall Street mainly into crypto is basically like imagine that we had an industry with a lot of fun and we were all believers and nerds and people who were looking for their luck, and we had some big boys who were playing in the industry and you may say controlling it, whales as we call them. And then came the big bad wolves, the big real whales from whale world. that are basically can swallow this whole ocean of our tiny tuna fish that we used to call whales in one sip. And it changed the game completely. I remember the day that the ETFs got approved, everybody was celebrating, and buying Bitcoin, and speculating about, yay, the ETFs are in, imagine Bitcoin going to 1 million, everybody would want Bitcoin. I remember that post here on Twitter, I posted the same day, I wrote to them, everything that they can long, they can short. And people were so excited, that money is coming in. The old money will buy Bitcoin from us. What I couldn't understand is that they invented a game, and now they see a huge blue ocean of noobs, of players, that think that they're good at the game, but they're now playing on a whole different level. They're playing now a apex predator level of the game, while they just used to play this with tiny fish, with a few tuna fish that they thought were scary. So I believe that the worst thing that happened to the industry is basically that the old came into the new. It allows giga level manipulations through ETFs for our tiny, somewhat legit but true industry that we had here, and we had fun in. We basically gave them straws, and with their big mouths, they can now just swallow everything they want in with a few sips and decide our faith. So, yeah, what can I tell you? The convergence was that we allowed the big bad wolves to enter our industry, to manipulate it as they like to do. And guess what? There's almost like zero regulation over here. So it's not like you have a circuit breakers, for example, that blocks them from manipulating the market in certain ways with rules and regulations. They can just send transactions on chain and do whatever they want. There's no ruler here. To those of you who don't know what circuit breakers are mechanisms that the stock exchanges are using to block someone from manipulating the market, or stopping the market from trading a certain asset when it's too volatile, and they want to cool down the trading to try and stabilize it. So the convergence, as it is bad. The convergence as it is going to be, when real adoption will come with RWAs, and when things will become more transparent and will stop being so chaotic and unfair, is going to be awesome. So I guess we should wait for the good times, but as it is for now, I wish they would never come. But if they're already here, we are learning how to live with them. Unfortunately for us, usually the ones who pay the price are not the VCs. It's usually the retail investors, like always. So that's my 2 cents.
Thanks, Tomer. And I think one of the things we touch on is, like, especially people who are working in the RW space, is that we know, just say 4 years ago, crypto is an even more dangerous space. You have to be tech savvy, code savvy, to be at least checking if the smart contract you're interacting with is actually phishing for your actual wallet or something. But I think we have seen one of the things that's seen is positive in this space is that while regular, I'd say both the builders or the more tech-oriented people are talking to all like a little bit less regulation, but we can all see that from all the rug pulls from the years that some regulation, while it does slow down the speed of innovation, it is better for, say, our retail investors at large. So because we have, I'm so glad before we go into the end of our session, because we're running a little bit over time, but that is thanks to our speaker having such wonderful insight to share. One thing I do like to ask before I close out the session, we have a live Q&A set, but given today's X space, I can see just people joining. It seems like the people who are raised question are either booted out, just like our speakers need to rejoin and joining every day. So sadly, today there won't be a live Q&A session, but I want to thank all of our speakers here, Tomer, Hein, Thomas, Michael, Ruthie, for joining today's session. So lastly, to every one of our speakers, I'd like to say, is there anything on the horizon, anything exciting you'd like to share in the capacity that you can share? I know all of our projects may have something be cooking, so you cannot share something so publicly yet. But if there's anything that you can share at the moment, our audience would love to hear it. So I'll start with Hein.
Yeah, so recently we've been investing a little bit more in the security of our network because we saw what was happening out there, right? So at the beginning of the year, we made the decision to invest more in protocol security and whatnot, and that has already led to one large hard fork that fixed, I don't know, more than 60 different bugs. We have one coming up very soon, and we've also been investing a little bit in the platform itself, that it's easy to develop smart contracts. So I'm looking forward to seeing what people will cook up.
Thanks, Hein. What about Thomas? Anything on the products that you'd like to share?
I don't think there's a lot to add what Heinz said between developments there. We are still working on Dusk EVM, which is our EVM compatible layer 2. We are planning to launch a product there called Dusk Trade, which is purposefully built for regulated assets to be tokenized, traded, and all the other use cases that you can then simply do once you have those RWAs on a open and composable blockchain infrastructure.
Thanks, Thomas. And then I'll go to Michael.
Yes, first of all, thank you to everybody that came today, and thanks for listening. Thanks for attending and answering. And I think it was super interesting. Shift is starting an airdrop soon and is launching our product soon and launching leverage spot assets very soon on Solana, on Jupiter. So I'd say stick to our socials to see what's new if you're into RWAs. And I think it's going to be very interesting in the next couple of months. So yeah, happy that everybody's listening in today. Thanks for joining us.
Lovely. What about Tomer?
Well, not too many news on my end. I think you heard me enough today. I want to thank everyone for taking the time to listen to us, and thanks you for inviting me to join this. It was fun, and looking forward for the next one, guys. So stay awesome, everyone, and see you on the other side.
Yeah, make sure, so before we close out the session, make sure as you can see here in the live session, we have every ship's handle here, Dusk handles here. I'll also read out everyone's handle just in case anyone will follow. Hein Delvin, Neo Tamandua from Thomas, Michael Viz from Michael, Crypto Shrimto from Tomer, and Ruthie Builds by Ruthie. And once again, there's also Shift and Dusk official X account, so you can make sure to give it a follow so you can receive all the latest news coming from those projects. So thank you so much for listening to today's session. Good night, good morning, good afternoon. We hope you have a lovely day today.
Thank you. Ciao.
Thanks for having me. Ciao.